Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She is a personal financial advisor. You can contact her with the email hongzongyuan@vcfc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today we're going to share with you about the Vietnam Strategy 2023. Let's come to the industrial manufacturers' own businesses that promise near-term recovery. Summary. Exports to China upstream materials and commodity prices were hurt first in 2022. Export orders were hit as early as Q2 2022 before the global economic slowdown affected Vietnam's consumer spending in late 2022. This impact was pronounced in exports to China due to that country's zero-COVID measures and upstream materials for consumer goods as customers decreased orders for upstream materials first when destocking. Spreads between input material and output prices compressed as commodity prices corrected quickly amid a global slowdown in demand. Furthermore, some commodity importers in our coverage incurred foreign exchange losses as the Vietnam dong depreciated compared to the US dollar. Although the near-term outlook remains weak, we expect the following areas will begin to recover first in 2023. Firstly, Vietnam's exports to China could recover in Q2 2023 as China relaxes zero-COVID measures, in turn supporting downstream demand for the HC's packaging paper. Secondly, while we expect turnover in all the markets to be weak until Q2 2023, we also expect foreign destocking activities to ease, which will initiate a recovery of orders for upstream materials, including STK's giants. Thirdly, the destruction of high cost input inventory and the potential recovery of China's commodity demand could support a year-on-year expansion in DHC's price spreads. Lastly, we forecast that foreign exchange losses will ease for STK and DHC as the Vietnam dong strengthens. Downside risks: weaker than expected demand due to stronger global recession and or prolonging zero-COVID measures in China, stronger than expected changes in commodity prices that would dampen the price spreads of DHC, EGC, and or TLG, strong fluctuation of the Vietnam dong that could lead to large foreign exchange losses and dampen export competitiveness. Stock recommendations. DHC is the cost leader in Vietnam's packaging paper industry, which cushions its sales volume amid weak demand. We expect the company's price spread to rebound strongly in the short term. STK will continue benefiting from the global shift towards premium recycled plastic, yarn, and other relocation from China. We expect STK's customer orders to begin recovering in Q1 2023 to manufacture for the winter in 2023. The GC accounts for at least 30% of world pro- phosphorus exports and has leading and widening cost advantages. For 2023, DGC's PE looks attractive at 4.8 times despite a year-over-year correction in its price spread. Let's see on the screen, and I will share with you guys about the key data and summary valuations. 2022 stock performance recap. Share price performance of PTB, GDT, and STK. Share price performance of DGC, DHC, and TLG. Compares to the VN Index export-oriented manufacturers, PTB, STK, and GDT underperformed as their orders and earnings weakened. GDT recorded double-digit earnings growth in H1 2022, but quickly became the most heard among the three companies as Q3 2022 net profits after tax nosedived when customers began destocking. STK and PTB outperformed the VN Index in H1 2022 as their earnings recovered from COVID-19 disruptions to manufacturing in H2 2021. However, their share prices plunged in H2 2022, similar to GDT. In addition to softened sales volume and profit margins, STK was hit by foreign exchange losses from its improved plastic PET chip imports. Corrections and commodity price spreads damaged the share prices of DHC and then DGC. DHC's 9 months 2022 net profits after tax slumped 24% year-over-year. The company's earnings began to slide in Q2 2022 when selling prices declined, in turn pressuring DHC's high-cost inventory of corrugated container inventory. The HC also suffered foreign exchange losses from its OCC imports as the Vietnam dong depreciated compared to the US dollar. DGC outperformed the VN Index. It's enjoyed a strong rally in H1 2022 as price spreads soared, but subsequently followed. DHC as its price spreads compressed at a slow rate starting in Q3 2022. DGC's 9 months 2022 net profits after tax soared 3.4 times year-over-year. TLG strongly outperformed the VN Index as its 10 months 2022 net profit after tax doubled year-over-year. In 2020-2021, COVID-19 caused school closures and dampened TLG's revenue, especially in H2 2021. In early 2022, domestic stationery demand rebounded strongly after school closures ended. In addition, TLG's profit margins improved in 2022 thanks to its low-cost plastic inventory. Key sector trends and 2023 outlook. Near-term demand outlook. China could recover while other developed markets remain weak and Vietnam worsens. China demand can recover, benefiting commodity prices and DHC's sales volume. Our view on China's reopening is that there will be a relaxation of most COVID restrictions by late Q1 2023. DHC is the only manufacturer in our coverage that has significant exposure to China's consumption as it sells carton boxes to manufacturers in the Mekong Delta, many of which are fruit and seafood exporters, largely exports to the Chinese markets. Similarly, its mainstay product, packaging paper, is also partly exposed to these manufacturers. In addition, 7% of DHC's revenue comes from direct exports to China. In terms of commodity prices, a recovery in China's demand would support a rebound in paper prices, thus boosting DHC's price spreads. Vietnam's export turnover to China. Other developed markets export turnover to remain weak until at least late Q1 2023. A potential recession of the US economy and tightening monetary policies in Japan and the EU would weigh on demand and imply a year-over-year contraction in spending on wooden furniture and fashion in our view. According to the Vietnam General Confi Confederation of Labor, wooden furniture and apparel workers are the most negatively affected among all industries. Notably, some furniture exporters have reduced working hours, offer an early Tet holiday, or lack of workers. The wooden furniture industry to experience more difficulties than textiles and apparel in our view. According to industry associations, for H1 2023 production, orders for apparel have been cut by 20%, 40% compared to normal levels, while orders of wooden furniture have been cut by 30%, 50%. We expect a recovery of export turnover to begin in late Q1 2023 for apparel and textile, and in mid-2023 for wooden furniture. Most wooden furniture exporters expect the weakness and sales to persist throughout Q4 2022 to Q1 2023, and many expect it to last till Q2 2023. The big ticket side of wooden furniture makes it a more discretionary category of spending. In addition, climbing interest rates in the US continue to dampen the housing sector, in turn hurting Vietnam's wooden furniture exports. The US typically accounts for 60% of Vietnam's wooden furniture exports, while Vietnam's 9 months 2022 wood and wooden product exports increased 11% year-over-year, figures 360. This figure is distorted by exports of wood pellets or fuel amid high energy prices. Finally, while both industries are not concentrated, there are large concentrated FDI and state-owned players in textile and apparel, whereas wooden furniture is more fragmented, with hundreds of small product producers that may not have substantial financial resources to have them withstand a downturn in demand. However, the impact of this situation for Vietnamese manufacturers' revenue in 2023 can be cushioned by two factors: an ease of destocking and continuing order relocation from China. These factors will be discussed in following sessions. Vietnam's apparel and textile exports, Vietnam wood and wooden product exports, seasonally adjusted monthly U.S. retail sales, U.S. monthly retail inventories sales ratio, Vietnam domestic demand to worsen. The HC and TLG are relatively resilient. Although our industrial manufacturer coverage is heavily oriented, TLG generates 80% of its 2021 revenue from domestic consumers. The HC has 50% exposure to domestic paper consumption, and 30% of PTB's 2021 core revenue or stone sales to the domestic property and infrastructure sectors. As discussed in our customer session, we expect Vietnam's consumer expanding to weaken across most product categories in 2023. In addition, our house view on real estate is conservative for 2023, given the funding issues of property developers, higher mortgage rates, and slow projects approval process. The bullwhip effect, we expect this destocking will ease and upstream materials will recover relatively early. This effect described when orders to suppliers fluctuate stronger than end consumer demand in industries with long supply chains and shipping times, which are especially prominent in the textile and apparel sector. This effect was exacerbated in early 2022 as a result of high inflation that prompted players to overstock and then destock afterward. Looking forwards, while consulting firm Make, McKinsey expects 2023 global non-luxury fashion sales to decline 2% year-over-year in its low estimate. Vietnamese apparel makers' customer orders for the next few months have been cut by 20% to 40%. As downstream players that stock during the holiday season, we expect this bullwhip effect to eventually reverse its trend, thus supporting the recovery of Vietnamese exporters, despite a continuing gloomy outlook for consumer demand. The bullwhip fluctuation becomes stronger higher up the value chain. Yarn manufacturer STK's customer orders were affected recovery early in late Q1 2022. The company expects a Q-of-Q recovery in orders in Q1 2023, which will serve the winter 2023 sales season. As such, we expect STK's revenue and earnings will rebound before apparel makers and furniture manufacturers. Year-over-year growth of U.S. monthly yarn imports, apparel imports, and retail sales of clothing stores. Export markets share Vietnamese exporters remaining shape to capture markets share left by China. The global trend of sourcing diversification away from China continues. We believe this trend will continue despite the relaxation of COVID restrictions in China. In the 2022 fashion industry benchmarking study by Sam Liu and the United States Fashion Industry Association, 50% of survey fashion companies source more from Vietnam than China in H1 2022, compares to only 25%, 30% in recent years. Moreover, in response to compliance risks from the US implementation of the Uyghur Forced Labor Prevention Act, more than 85% of respondents plan to reduce their apparel imports from China. According to STK, its largest customers shared that although they plan on reducing global orders in 2023 compared to 2022, the proportion of orders allocated to Vietnam will increase 15% year-over-year thanks to orders being relocated from China. These brands plan to reduce orders from China by 30% year-over-year in 2023. Shares of Vietnam and China in the U.S. apparel imports. Shares of Vietnam and China in the U.S. wooden furniture imports. Vietnam remains ahead of competitors to capture the lost shares of China in labor-intensive businesses. While we have discussed advantages such as labor cost and trade tariffs in previous reports, we focus here on more details regarding apparel and wooden furniture. While these industries' labor costs have become more expensive amid wage competitions uh, from value-added industries such as electronics, Vietnam remains ahead of many competitors. In the 2022 fashion industry benchmarking study, among major competing countries, Vietnam sourcing costs are second only to Bangladesh and ahead of India and Indonesia. Meanwhile, Vietnam trumps other Asian countries in additional criteria, including speed to markets, flexibility, and agility, and risks of labor, social, and environmental compliance. In addition, having access to a relatively developed supply chains of input materials compared to Bangladesh and other Southeast Asian countries solidifies Vietnam's position in the apparel and wooden furniture industries. Strengths and weakness of primary textile and apparel sourcing based 2022 by country. Yeah, and that brings me to the end of my presentation today. About industrial manufacturers. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can assist you. Like, subscribe our channel, and share this video to everyone. So thank you for your attention and listening. Have a nice day and see you next time.